What's going on, everybody? And in this video we are going to be taking a deep dive into Chevron stock, ticker CVX, a good dividend stock overall. We'll talk about, do I think this stock is a buy, in my personal opinion. We'll also be looking into an entire just energy sector and oil market outlook. So how can this company perform in this market and economy? We've got a lot to go over in this video. So I'll ask, if you enjoy dividend investing and dividend stocks, all that good content, make sure to subscribe to the channel and turn on post notifications so you don't miss out on any of my future videos. Now, enough of that talk, let's get straight into it. So we are looking at this stock right here, which currently trades for $134. Now, over the past year alone, this stock is up a whopping 45%, and you can tell ever since about September, this thing has just been on a complete uptrend, okay? It's been doing very well, and the entire energy sector as a whole actually was the top performing sector of the S&P 500 for 2021. We'll look into that later in the video, but let's go ahead and talk about for the past 3 months, it's up 17%. So a lot of people are saying this might be an overvalued play. Let's go ahead and look into what analysts are saying. So first up, on Morningstar, it says it's trading within its fair value. It has a fair value of roughly $128. Now, that does not mean the stock is only worth $128. This is just an analyst look. Let's go ahead and talk about some highlights that I have in this article. They expect Chevron to deliver higher returns and margin expansion thanks to an oil leverage portfolio, as well as the next phase of growth, which is focused on developing its large advantaged Permian Basin position. So that's pretty good. We want to see them delivering higher returns. Of course, oil and gas prices will dictate Chevron's earnings and cash flow for the foreseeable future. Now, oil is actually expected to do pretty well over the next year, and especially kind of with inflation just kicking in, we should expect oil and even gas prices as well to increase, which is only going to benefit Chevron. Now, let's go ahead and talk about the last highlight I have right here. This is pretty big. Overall segments returns should improve. However, thanks to higher oil prices during the next 5 years and the addition of higher return projects, newer projects should have superior economics and can earn higher returns at lower oil prices. So what they're saying is we should see some pretty good stuff for Chevron overall. Let's go ahead and talk about the stock as a whole. They have a forward PE of 15, which is pretty solid, a dividend yield of 4.04%, and their market cap is about $245 billion. Now, I wanted to go ahead and talk about this. The payout ratio, it's going to say 94%, but one thing I really like is it's not really 94%. It's probably going to be like as low as around, I don't even know, 40% if these numbers are right. And let's go ahead and look into that in a second. But they pay out these dividends on a quarterly basis, and they are a dividend aristocrat with 34 years of dividend growth and a 4.36% 5-year growth rate on their dividend. Let's go ahead, and here's what I'm talking about when I say this payout ratio is kind of out of pocket. So Chevron they have earnings coming out on Friday, January 28th, and analysts are expecting $3.13 per share, which is really good, and that's for 1 quarter, $45 billion in revenue as well. That's really good. Well, if you're 3 times, let's just do simple math, 3 times 4, that's going to equal 12, okay? You're going to get $12 earnings per share roughly with a $5.36 forward payout. That's a really low payout ratio. Expecting that they can keep these earnings, if not grow them, but just completely stagnant, that's pretty solid. So it's a really good payout ratio, especially in the oil industry, and already having a 4% yield, that could lead to some big dividend increases and some really good income potential for your portfolio. So looking more on a Chevron, I just want to talk about some statistics on this company. They have pretty good margins compared to their competitors like Exxon Mobil. If we see right here, Exxon right now is a negative profit margin, operating margins. Now that is kind of offset from COVID, but Chevron has come up and started to rebound a lot faster than their competition, it seems. They have some really good free cash flow, $13.41 billion. Looking at their just overall profile, they have 2 segments. They have the upstream and the downstream portfolios pretty much. So the upstream segment is involved with exploring, development, and production of crude oil and natural gas. Main stuff like that. And then the downstream segment is pretty much refining crude oil into petroleum products, marketing the oil, refined products and lubricants, and all those different things. Now, Chevron, if I'm not mistaken, makes about 70% of their income from the upstream segment, which is their main segment. Now, I did go onto their website, and I tried to get access to the investors' information, and the website is either down. I don't think that this website is that high quality, and if I'm being completely honest, I want to see a company that is almost more determined into making things better. Like it's just something about me. Like none of these words are even capitalized. I try to go to their investors website, and this is what happens. The request is blocked. So I don't know why that is exactly, but it's not the best thing. It's not necessarily the worst thing either, but I think it's something that they should fix. If you want to get investors into your company and provide value to your shareholders and potential shareholders, you should let them access your investor information. So that's just one thing. I don't know how long. Maybe it's just a bug that happened today. Maybe it's been going on for a while. That's just my personal input. Now, analyst expectations, revenues, and expectations are really good over the next year. $8.50 for 2021 earnings to $9.96 in 2022 is really good. 9% sales growth revenue estimate, which is really good. Overall consensus is a 2.2 buy, which is really solid. Institutional activity on this company, if we look, about $15 billion in inflow and $12 billion in outflow. So more buyers than sellers is pretty good to see. Q3 of 2021 was more selling pressure, but we're starting to pick up that buying pressure again, which is, good stuff to see if you're wanting to invest in this company. Now let's kind of go ahead and talk about price targets. Looking on price targets for the company, average is about $141 a share, which is 5% upside. Now Morgan Stanley analysts just increased their price target to $166. That's really big. So keep that in mind. If Morgan Stanley, really good investment firm is predicting this, could mean some stuff is coming very soon. Now looking on to some more things. In terms of valuation, Chevron is almost trading a little bit higher than the industry, a forward PE of 13 compared to the average forward PE of 6. So some would say they're trading at a premium. It's also worth noting that Chevron is trading at a PEG ratio of 2.9. And, usually they say 1 or below is good. The oil and gas industry as a whole is trading at PEG ratios of 0.68. And this could be offset by a number of reasons, It could almost be COVID and still people recovering from that, like companies. And Chevron has almost made their recovery already. You can already see it in their earnings and different things like that. But that's one thing to keep in mind. And let's go ahead and talk about just kind of the whole market. So oil and gas stocks have been performing really well in 2022. Now let's go ahead and talk about this. This is 2020 returns. They were the worst performer. The energy sector of the S&P 500 was the worst. It lost 32% in value. Now if you go ahead and just kind of keep scrolling down, you will see in 2021 the S&P energy sector was the best performer. Now the companies did do really well, but also their stocks did very well because they did so poorly in 2020 just because of COVID. Now looking onto some more things, the energy sector is said to potentially stay hot in 2022, but it may have a tough time if the gap between supply and demand ends up narrowing. But if oil and gas prices remain where they are right now, even mediocre companies should be set up to make a ton of cash and can be used to either buy back shares, giving you more ownership of the company, growing their dividends, and invest in the future of the business, which does set up Chevron for some pretty good solid potential. Now I went to Wall Street Zen. I'm not sponsored by this company, I'm just saying. They had some pretty good due diligence checks on the company. Everything was really good. The only things that were negative about this company was usually their expectations for forecast revenue. So for example, they were saying it's only supposed to grow at 9.44%, which is not exceptional. That's still pretty good. It's not a tech company, so you can't really be expecting them to grow like at 30%, but that's pretty good. The only things they were saying is, hey, they're not expected to grow that fast. And they're a very big company, so it's hard for them to grow that fast, especially not being a super innovative company. Now, one thing I want to talk about was kind of just an overall economy look. A lot of people are concerned with the tensions with Russia and Ukraine and the United States. What could that cause in the economy? And looking in the energy sector as a whole, Russia provides 30 to 40% of Europe's oil, gas, and coal, and their exports supply about 4 to 5% of the world's energy. So keep that in the back of mind, what that could cause for Chevron. And energy costs, they've been going up per barrel. So this is beneficial for Chevron. So in my personal opinion, I do not own any CVX stock. It's just not in my portfolio. It's not that I hate the stock, I just usually don't invest in energy companies. You know, I don't need high yield right now in my portfolio, but I do think with the expectations and the growth in earnings that they're seeing and coming back, and their relatively low payout ratio to what they're expected to return, could make this stock a really good buy, especially in the energy sector, which is predicted to perform pretty well. That is my personal opinion, not financial advice. You have to understand, is this stock a good fit in your portfolio? You can't listen to other people. You have to make sure it's a good fit for you. But everybody, thank you for making it to the end of this video. If you enjoyed it, make sure to subscribe to the channel, turn on post notifications for all future videos. Check out the links in the description or the pinned comment down below. Use M1 Finance if you haven't built a portfolio already. If you sign up, deposit $100, you'll get a free $50, 50. It's free money out there. Now, check out my Udemy investing course if you want to learn more on how to invest. It's got 7.5 hours of content. It's on sale. Link is in the description below. Thank you for making it to the end of this video, and I will see you at the next one.